Hello, hello. This is Wayne Belisle, CPA, with another Profit Maximizer moment. Today we're going to talk about the hidden reason why busy businesses stay broke. Little dirty secret. I'm going to tell you the answer right now. It's the business owner's fault. Been there, done that. I'm a business owner. I've been guilty of it too. All right. Look, common theme I hear all the time is I'm working harder, making less, or I'm working real hard. I'm not making as much as I would if I just worked for somebody else. Yeah, you can see it. Your calendar's full. My to-do list, which is how I track my to-do list. I got stickers all over the place. We're busy. Check your bank account. Check your profit and loss. Hoping you're looking at your income statement. Um, you're broke. You don't have money in the bank, but your financial statement says you made money. So the common question I get is, where to go? Well, yeah, we'll talk about that. Where did it go? All right. Look, understand, being busy, just staying busy is not the same as making a profit. It doesn't equal value. All right. I remember talking to a restaurant owner who was working 70-hour weeks. I mean, he was just open all the time. Got there early in the morning. He might take a lunch while he was there so he could supervise the lunch crowd. He never ate on time. Stayed till, they closed at 9 o'clock. Then, of course, if you've ever worked in a restaurant, if you open at 10, you're there early because you're prepping the food. If you close at 8, you're there a long time after. All right. But so when we took his hours, he literally was making no money. He was he was making a minimum wage easily. And I got businesses like that, doctors even, that when you take the amount of work they put in, they're just not doing it. Part of the problem is what I call the taxi model. Okay. Every month you start off at zero. That's what you have. And until you actually, you got to sell. You got to bring money in to pay the bills because you have no recurring revenue, which is another thing we've talked about before. Recurring revenue is the most important words in a business. How do I get the money coming in all the time? Look, working 8 to 10 hours is not necessarily being productive. A little exercise I've done is if, heaven forbid, the owner had a medical problem, heart attack, whatever, and could only work one day a week or 4 hours a week, what would you do? What things need to be done? All right. And there's narrow it down. What's most important to your business? Is it, staying on top of your emails and answering all your text messages? Or would you be better served calling your top 5, 10, 15 customers, your top customers, and making sure they're happy, making sure they stay with you, and seeing if they need more of your services or if they need more of your product? Which one would get you the biggest bottom line kick? Well, your importance to the business is your face, is you, because you're the face of the business. No matter how big you are, I don't care if I get a large regional bank. If the vice president in charge of operations and the president comes to see you, it makes a big difference between some flunky, I don't mean it that way, or some low level banker. All right. So the same is from you when you're going to your clients. Okay. Um, really, the biggest problem is business owners. We correlate as if being busy automatically transfers into having profits. It's not necessarily true. So when I said the biggest problem is the business owner, it's because I'm saying you're not concentrating on the correct things. All right. So what things can what if somebody, let's go back to one of the things I said. Hey, my financial statement says I'm making money. Where's the cash? All right. Well, a couple things, almost always. Receivables. All right. There's really three things. Receivables, well, four. Let's go four. All right, because there's really a fourth I'm looking at. But your receivables, you're not collecting it. Yeah, you sold it, but it's not, in my mind and in most people's mind, it's not really a completed sale until the money's in the bank. All right. Second thing is inventory. If you're selling a product, your inventory is a beast. It will grow automatically. Control your inventory. You have too much inventory sitting out there. And that's basically receivables, just sales where the cash hasn't hit your bank. Inventory is one step farther back. You haven't sold it yet to have it as a receivable to collect it. So keep your receivables. That's why just in time, uh, production and just in time inventory and drop shipping. A lot of people have a minimal inventory, but they can drop ship it. Order a lot of times you can order your product from the manufacturer and have it drop shipped straight to them, where you don't even have inventory. I mean, something to think about. It's an Amazon model. Um, books. I've written that book that we did. I can have it shipped straight to somebody. Now, as far as I'm working harder, but my income statement doesn't show a profit, one of the biggest items that I see is it's really in two areas. We're going to be, oh, by the way, I said, let me finish my prior thought. If you don't have the cash, you probably bought a lot of equipment. Forget you bought that. You have a lot of loans that you have to pay principal to, or the owner is taking out number five, they're taking too much money out of the business. So, I mean, that's why you need to know how to read the balance sheet and have it compared to the prior year. Because if the income statement shows you how much you made, the balance sheet shows you where it went. Okay. If it didn't go into cash, it's hiding in receivables or inventory, or you bought equipment, or you're paying loans, or you took it out personally. It's one of those. That's the majority. So you need to look at it. Now, if you're not making money, it's probably because you're not pricing it correctly, or your margins aren't there, or you're overstaffed. Those are the ones that are going to be the biggest difference. You can look at all the other expenses, but like I've said before, the cost of your product or the people, if you're a service industry, it's mainly the people, is going to be the biggest expense item you have. So those need to be controlled and they need to be productive, that's another thing we need to look at. But um, that's beyond this. I'm not going to waste a lot of time on that here because I've covered it before and we'll cover it again. But you need to look at um, systems in place so that you're optimizing and maximizing the people that you've hired. And then get my book. We're going to do a launch. We're going to do a 3-day webinar. I don't forget what we're calling it. My mind just went blank. Um, second week in October, in February, I believe. Get on there because we're going to be covering a lot of stuff in a little bit more detail. And then we're going to be doing our coaching program, finally getting it launched, where we're going to go a 13-week coaching program for the book, which is it's definitely worth the money because every time I've worked that with somebody and put the stuff I put in the book is stuff I've been coaching people for years. So we have that, and I've never coached somebody that didn't make more money after we were done. So that's besides the point. Look, also don't discount. All right. If I discount by 10%, I have to have a 33% increase in sales to break even, assuming I have a 40% profit margin. So I sell something for $1, cost me 60 cents, full costing, from beginning to end, people, the whole 9 yards. Okay, if I do a 10% break, I have to have a 33% increase. If I do the opposite and I increase my prices by 10%, I would have to lose. Now my brain stopped, but I think it's 25 to 30% of my customers before I lose money. So don't, I got a discount chart. I put it in the book too. I don't want to waste time, but I hate giving you bad numbers. So let me see if I can find it real fast. Yep, I just went by it. Yeah, this is the book I'm talking about, the 90-Day Profit Reset. So covers a lot of stuff in there, and we're going to cover it in more detail in our course, and we're going to cover it in some detail in our webinar. Here we go. Okay, so if I'm at a 40% margin and I raise my prices by 10%, I can lose 1 out of every 5 customers and not have an effect on my bottom line. And think about that. Usually the ones that leave are the ones that are opinionated, that don't want to pay your prices. They're price sensitive. We don't really want that. Now, there's a lot of work that goes into this besides just deciding to raise prices. We need to make sure we have value. I did that last year where I raised prices on most of my corporate returns, but we added value. We're adding even more value this year. I brought in another CPA that's going to help me so that we can actually service it correctly and add more value to our clients. So yeah, did I lose anybody? No. I raised them about 20 to 25%, which said it said I could lose at a 20%, I could lose a third of my clients and make the same profit. I lost one person, and I'm not sure I lost them there. That's another story. But that's because you need to do the homework and set up a plan correctly. Look, all of that I'm talking about kills you slowly. Not having control of your product costs is too. So what do you need to do? Well, you need to redirect. It all comes back to the owner because you don't even have time. I'm so busy, I don't have time to get coaching. I get a coach. I got one. I got two now for all practical purposes. I got Lindsay, who's helping me with the, the coaching lunch, and she does all my marketing. I have another one that helps me just because every now and then I need to bounce an idea off of. Okay. Um, so what do you do? Well, start being a manager rather than working shift. Start doing more, stop doing more, start doing what matters. All right. Work on the stuff that will lead to the bottom line. Remember Pareto's principle, the 80-20 rule. That's what we know it by. 20% of your customers are probably generating 80% of your profit. I've seen it as high as 5% of customers are bringing in 90% of profit. All right. It's somewhere in there. So what do? Week one, list your top 10 customers, call them, find out what else they need from you. All right. Week two, track time. And I would, by the way, let's expand that. I would call your top, find out who's your top 80-20, 90-10. I'd call them all that are in that 10 or 20%, but keep it simple. Call five one week, 10 if you can. Call five the next week, 10 until in the first month you've covered it all. Week two, I want you to track your time for 1 week. I do this still. All right. One time during the year and find out what I'm working on that I shouldn't be working on. I have a sign up here somewhere. Yeah, right here. It says, how can I get someone else to do this? All right. What I'm after is how can I find somebody else in my office that should be doing this, not me? How do I determine that? Well, I track my time and I say, all right, I spent 2 hours reviewing my emails. Should I? What would I pay somebody? What's my hourly rate? If I want to make a certain amount of profit, whatever profit you want to make, let's say you want to make a $200,000 profit. If my calculator would ever bother to show up, there it is. So I do a $200,000 profit divided by 2,000 hours because you're going to take some time off and you don't want to kill yourself. I need to charge at least $100 an hour. I need to make at least $100 an hour. So would I pay somebody $100? Would I pay somebody $100 an hour to review my emails and answer the easy ones? Yeah, move the hard ones up to me. Okay. No. So that's what you're looking at. Figure out what you want to make, divide it by 2,000 hours. I usually do 1,500 because you're going to lose time. And decide, would I pay somebody, and get rid of that if you can. Now, how do you get rid of it? You stop doing it, you outsource it, you delegate it in that order. All right. Calculate your gross profit on your top 5 items. You want to look at figure out your top. Truthfully, you should know this for all your products, but your top selling items. What is your real gross profit? What do I mean by that? Here's my sales price. What minus my cost? What is my cost? I like the ABC cost method, activity-based costing, which basically means from the time I start to go get the working on the prospect, the time it takes to sell an order, put a PO in, get the product, or if you're doing a service, the amount of time that's in there, the cost of the product, the cost of delivering it, the cost of, of receiving the money. What is that? All right, so that I know my cost for every single item. At a bare minimum, know, like if you're a restaurant, know your cost for your products that are in each item on your menu, if you can. I had why? I had a restaurant that I did that for, and they went, "Oh my gosh, we can't do that. I got so many items on the menu." And I said, "Fine, take your top 10, 15, 20." They came back. I was coaching with them. They came back in 2 weeks, and they had done everything on their menu. And I went, "I thought you said it was too much." Well, what they realized when they did the top ones is the ones they thought they were making a lot of money on, they weren't making as much. And things that they didn't think they were making as much money on, they were. So what was happening is that, and worse, they were promoting the items that weren't making as much money and really not pushing the items that were making more money. So they kind of changed it around. They were able to take things that had a good margin and put them on specials. They had a different special every night of the week. Taco Tuesday, everybody knows that, but they had others. And so they were able to do that, which is fantastic. And what that did is they were able to make more money without having to work harder. They didn't have to sell a bunch more. All right. That's the thing. That's the key. Business is, if you want to make a profit in business, it's not about working harder. It's about working on the right things and working smarter. All right. So to summarize, being busy is easy. Being profitable takes time, effort, and attention. Be aware we're going to be looking at pay attention. We're going get on my mailing list. Okay, it's HTTPS. Well, you can just go to wjb-cpa.com and you can get yourself on the email. wjb-cpa.com or waynebelisle.com will work also. All right. You can, look, remember, you can't fix things if you don't measure them. You got to get the work done. Rethink where you spend your time. If it doesn't, is it generating profit or is it just keeping you busy and making you feel busy? All right. Invite questions and comments from your customers and everything, and I invite it from you. If you have questions or comments, shoot me an email. My email, yeah, I'm easy to find. It's Wayne at wjb-cpa.com. Uh, be sure to join our email list so you get updates as we're doing courses. This is my year where we're finally getting the coaching program, not just for 4 or 5 people a year, but where we can help a lot more people. And that's because I hired a CPA and I didn't go cheap on it. I hired somebody good. I heard some, pay you get what you pay for. So until next time, this went a little long. I apologize. Until next time, this is Wayne Belisle saying, let's make this our most profitable year ever. Have a great weekend and God bless. See you in church. Take care. Bye.